Ladies and gentlemen, welcome back to the channel. Thank you for tuning in. We're going to talk about everything that is important this week that you need to know, featuring Cleo, the young kitty that is a future YouTube star herself. She seems to love the computer, the lights, the camera. She's a natural, but she's got to go. So if you guys hear her or see her, well, her name is Cleo. Nonetheless, guys, let's get straight into this video. We got to get down to action, baby. No time to waste. The S&P 500 is at a very critical level. We actually broke under it in after hours, which is not so good. And there we go. She's stepping on the computer once again. Bye, Cleo. Let's get into it, guys. So first things first, what do we have this week as far as economic data? Well, nothing too much, right? We don't really have anything. On Thursday, you have initial jobless claims, the Philadelphia Fed, and existing home sales, all of that coming out in between 8:30 and 10 o'clock in the morning. That's probably going to be one of the bigger data points. You also have Fed speakers, Fed Jefferson that speaks at 1:30 p.m. and Fed Cook that speaks at 1:45 p.m. But that's probably not going to be as important. And there we have her again. And then really nothing else. You have Fed Williams that speaks at 9:10 a.m. on Friday. That's going to be probably the most important Fed speaker, but this week is more so going to be focused around the data. And let's go ahead and pull that up, or the data around earnings, right? Earnings are going to give us, in a way, data about the economy. So for this week's earnings, you have Bank of America in pre-market tomorrow on Monday, and then on Tuesday pre-market you have Goldman Sachs, Johnson & Johnson, Hasbro, State Street, a lot of companies Tuesday morning. And then Tuesday afternoon things really start to kick off with Netflix, Interactive Brokers, and a couple other banks, but Netflix obviously is going to be the big one, the first big company for this earnings season, really. And then Wednesday after hours you have Tesla, you have IBM, you have Kinder Morgan, you have Alcoa, WD-40, along with some other companies, but these are expected to be the more important ones. And then on Thursday, pre-market, you have American Airlines. That's really it. The Blackstone Group could be important as well, AT&T. Thursday, after hours, you have Snapchat. That's one of my bigger holdings, so that one's pretty important to me at least, and it will move the markets around. Snapchat alone in previous earnings seasons has really moved the markets around in a big way, depending on what they say, because it's advertising, right? If people are slowing down on advertising, that's a large part of the economy nowadays. Think about Google, obviously Snapchat, think about even Microsoft, Apple, Amazon. These companies all have advertising in their businesses. So that'll be important depending on what Snapchat does say. And given they've been so beaten down, there could be big potential here for a lot of these stocks to see massive recoveries if earnings do warrant that the stock should be much higher. But again, if earnings warrant the stock should be much lower, that could also happen as well. Now, Friday pre-market, you have Verizon, American Express, Huntington, and a couple other banks and smaller companies. Those are going to be the more important ones. So really, overall, big ones to watch this week, and the ones that I really want to play myself. And if you guys want to also come get in on some of those trades, link down below in the description to do so for that one. Come trade with me every time I make a trade, send out an alert. Simply a tool to use to add to your trading already. It's not something that is guaranteed going to be a home run slam dunk. It's not something you should take as financial advice or anything along those lines. It's simply a tool to give you kind of a reference on what I'm doing with my personal money. And then Netflix, that's going to be the most important one, the one I definitely want to trade if the premiums aren't too expensive. That's Tuesday after hours. Wednesday after hours is Tesla, and Thursday after hours is Snapchat. These are the stocks that could be some big runners, potentially to the upside or the downside. And I only say runners first because they've been so beaten down. Like, these stocks have all fallen. Snapchat's fallen 80% in the last year. Tesla down over 45% in the last year. Netflix down around 75% over the last year. There could be some room to get back some of those losses if earnings are good. So that's going to be the main story of this week. By far is going to be earnings, because we really don't have any economic data, and we're heading into that Fed blackout period. Now, I will tell you guys, whatever's priced in by the markets, that's what the Fed is going to do, and it's pretty solidly priced in. A 75 basis point rate hike is coming November 2nd. 97.2% of market participants are expecting that 75 basis point rate hike. So that's pretty much what's going to happen. It also wouldn't surprise me, though, if we do only get a 50 basis point rate hike, because, we've gotten 4 back-to-back 75 basis point rate hikes now, and we're heading into the midterms, right? There's been a lot of people that have been calling on the Fed to say, hey, you need to stop raising rates as aggressively as you are, or you're going to push the whole global economy into a major recession, and you're going to cause damage that you cannot easily fix, once that damage comes. So something to keep in mind, but it's not necessarily going to happen. But midterms tend to be a pretty bullish event overall. Now let's go ahead and take a look at the data behind AMC stock, and we do have just 1 second, guys. Gotta actually go ahead and re-log in, it looks like. But on Friday was pretty bad. Consumer discretionary down 4.25%. That's your consumer discretionary. That's your tech stocks, right? Your information technology down 2.87%. So consumer discretionary mixed with information technology, by far the largest sectors of the stock market by market cap, they were down a lot on Friday. That's why you've seen a 3% down move on the NASDAQ, and you're starting to see some people. I wouldn't be surprised if you're starting to see some liquidations and some massive margin calls that are around the corner for some of those hedge funds that are not shorting, weighted their portfolios to the downside. It could get pretty bloody here if earnings are bad. Now, like I said, if earnings are good and the Fed does, only give us a 50 basis point rate hike, well, you would definitely want to be long in the markets. Either way, I like to say it, though, at this point, you're probably not going to get a better buying opportunity for a long time, because it's one of those things. Why do you think the markets rallied so hard after 2008 and the returns were so good? Because when you're coming from the shithole of the bottom of the markets, when the NASDAQ's down almost 40% in a year, well, the markets tend to be in a much healthier place once things, get on solid footing, right? You've already been to that hell. You've already been to that pretty much worst case scenario. And the markets are going to be a lot more solid, on the backside of this, right? We're probably not going to have inflation in a big way, right? Hopefully these wars are going to be over, and hopefully we can get back to some semblance of normalcy, right? And once that happens, it's like 2008. The banks fucked up, right? They were giving out bad loans. What do they not do now? They don't give out bad loans. So it's one of those things where people are going to learn from the mistakes that are happening now, and you're probably going to see another 5 to 10 year bull run after this. And you want to be in the markets. The returns are going to be very, very high. This is your time to load up on your favorite companies. At least that's the way that I like to look at it. So nonetheless, let's get into AMC. So the cost to borrow max is sitting at 29.22%, cost to borrow average at 24.4%, and cost to borrow minimum at 5.47%. And also on that note, on that rant I just went on, earnings for banks were pretty good across the board. Not terrible, right? So at least some of the ones that we have gotten so far, JP Morgan beat on revenue by like $1 billion. So they've been pretty good, and I've been wrong on earnings before. So I'm not as bearish on earnings right now. believe that or not, just because of how cheap these stocks have gotten, it's a different story. If we were talking about, these stocks being 30-40% higher heading into this earnings season, yes, can they drop? Sure, but they've already fallen so much. I don't think the numbers are going to be that bad to warrant these stocks going down even more. They're already at very, very low PE ratios, right? And that's what's important at the end of the day. Now, as far as the live short interest on AMC stock, that is sitting at 18.82%, and the live short interest as far as shares that are sold short is sitting at 96 million. Sorry about that. And as far as the option activity on Friday, you've seen a 1% positive order value, 8 orders totaling $2.14 million. So nothing spectacular there. Some pretty bearish positioning as of on Friday. Now, I do want to talk about the technicals on the S&P 500 right here and right now, because I drew this bottom end line on Friday, like during the beginning of the day, because this is a very important level. This is the level in which we bounced off of September 30th and went on this couple day pretty parabolic rally, about 2.64% rally on the SPY the day after we hit that level, and then a 3.10% rally the day after that. So that was about a 5.5% rally in a very, very short amount of time, only in a 2-day span. And this was the day where you really seen some wild movements. The low of this day was way down here, and you ended up closing way at the high. And then we obviously have sold that off and went even lower than that, bounced back up from a lower low, and now we're sitting at that bounce level that we were sitting at before that 5.5% rally started, which I did mark that level, and we are very close to it. We actually broke under it at one point in the day, but then retraced back above it. So that level's sitting at 357.16, and you actually went as low as 356.98, it looks like, 93, and then bounce back up to that close of 357.63. So it does look like in after hours you might have broken that level, but that's not as important in after hours. You want to watch how the cash trading does actually unfold. Nonetheless, the RSI, the MACD, all of these indicators are very, very bearish. So that is also something that says, hey, maybe we could see a bounce as well. And same thing with AMC stock. You are at the lows of 2022. You've bounced up just a little bit, but the stock is trading at $6 flat. So, there's a lot stronger, lot higher potential. I think that we do get a bounce this earnings season, and potentially we do get some sort of a soft Fed pivot. Inflation data obviously was very bad, and the market still rallied off of it. So the markets can even rally for no obvious reason. Earnings are going to be the biggest thing over the next couple of weeks. If those are good, do not be surprised at what the markets can give you. So that's pretty much going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. This is the best time to be involved in the trading community. If you guys want access to that, link down below in the description of this video as well. Thank you guys for watching, and I will see you in the next one.